of FX Street once again. Welcome. It's Thursday morning, and we're getting right down to a really important event coming up your way, right? Because Jackson Hole is next, and this is the big deal right now on your economic calendar. And really, if you noticed how quiet things are this week, we spoke about it earlier. Yes, we're at a very quiet time of the year, and we understand that it's late August, and a lot of traders are on vacation. A lot of them have left their assistants in charge of the trading desk. But it's more than that, right? The Jackson Hole Symposium begins tomorrow. Jackson Hole is in Wyoming, in the United States, in the western United States. So what's going to happen? Well, we know that Yellen will be there, Draghi will be there, Kuroda, right? So we're going to have representatives from, I think, from all the major central banks are going to be there. And so don't be surprised if the interesting thing is that if any of them wishes to make an impression, now's the time to do it, because all of the television cameras are going to be on, and all of the microphones are going to be there. All the reporters are going to be there, right? So we have an awful lot of potential. So if I'm Kuroda, for example, and I really want to make the Japanese yen weaker, let's say, right, because the yen just keeps getting stronger. If I'm Kuroda, I'm probably going to say something that makes the yen weaker. In fact, the market is probably already expecting me to do that. And so the same thing would be true if you are Mario Draghi, and if you want the euro to fall to make your exports more competitive with let's say, Great Britain, then you're going to say something to make that happen, right? So this is the whole deal, right? You got Draghi, you've got Yellen, and you've got Kuroda, and you've got other central bankers too. All right. Now, why do people get so excited about Jackson Hole? Well, not only do you have the central bankers from many of the major central banks of the world all together in the same place, but a lot of times, because you have so many people paying attention, Jackson Hole has been used for major policy announcements like quantitative easing. If I'm not mistaken, I believe that Ben Bernanke originally started his quantitative easing with a speech at Jackson Hole, is where he announced the plan. All right. So Kuroda has recently discussed cutting interest rates. In other words, making them even more negative. That you could hear something about that. The U.S., Yellen has been talking about, and not necessarily so much Yellen, but really more so her underlings, have been talking about raising interest rates. You could hear more about that. Personally, I think it's a little bit crazy, but that's what they've been discussing. Bank of England, you'll hear from. Carney's going to be there. Carney says he doesn't want to go negative on interest rates, but they're probably going to cut rates again. You'll probably get more clarity from what's going to happen with Great Britain. So you can see all these different things. It's like how this market moves on news. Well, you could get major news on almost any major currency. You could get major news on all the major currencies potentially all at once. And that's why people are so excited about this event. And that's probably why things are so quiet. So that's our little speech on Jackson Hole. And so now you know, right? Because I won't be here with you on Friday. I will be back with you. I will be back with you on Monday, though, and we can go over the aftermath of it. So Jackson Hole all day tomorrow. Really, I think it begins this afternoon, although I'm not certain about that. As far as what's already occurred today, we did have the IFO numbers out of Germany were disappointing, and this is probably the biggest news of the day, economically speaking, were the weak IFO numbers out of Europe. Expectations were 2 points below. Business climate, 2 points below. And current assessment, 2 points below. IFO tends to be a market mover. At least it used to be a big market mover. Here we see the chart. We were talking about selling this short. If it had just come a little bit higher, we wanted to sell short, but it didn't quite make it. It's a shame, isn't it? Because it has pulled back to the area where we thought it would pull back. It has pulled back very close to that trend line. We said it would pull back to around 112 or somewhere between 112 and 112.50, depending on when it reaches that, when it comes into contact with that trend line. And that's exactly what happened. The only thing that did not happen, the euro did not move above the point where we wanted to sell. And that's how we like to do it. We like to use a bear trap. Let the bears push it to a new high, and then place a sell order underneath. And if that new high fails, if that rally fails, then we could then we've got them where we want them, so to speak. We're selling short as the price falls, and that's, in my mind, that's ideal. So anyway, if I go to the 5-minute chart here, I can take a closer look at what happened right around the time of that release. It looks like there was a bit of a jump higher right about here in euro, but I don't believe that syncs up exactly with the release of the report. I believe the IFO came out around here. So this activity, I'm not quite sure what generated it. It could have been the IFO numbers, although it's kind of hard to see the euro going higher on bad IFO numbers, but we know how this market, anything is possible. What do we have coming up? Some potential volatility makers here in jobless claims coming up in 12 minutes. Durable goods also coming up in 12 minutes. And so we could see a little bit of volatility in 12 minutes or so, but don't expect too much. As I said, it could be a very quiet day going into Jackson Hole. Fridays are normally quiet in the summer anyway, and it could be even more so this time around. Okay, so we also get market PMI coming up in about an hour and a half from now, so that should also be interesting. All right, and none of these Tokyo numbers I really would expect to move the yen. The yen just doesn't move on economic data. The yen is more concerned with issues outside of economics per se. And it's funny, but that's just how it works. The yen has a mind of its own. Okay. All right, let's get back to the daily. So we missed the boat on this short trade here just by a little bit. We wanted it to come above this dotted line. It did that, but not by enough to really get us a chance to get short. And it has pulled back to the lower end of this bullish channel. And so it probably becomes a buy down in this area. But it did not come into contact with that line. Generally, I like to see it come into contact with a trend line before I start thinking about getting long. So I guess this is pretty typical behavior for a low volatility environment such as the one that we're in right now. It comes up, but just not quite enough for us to sell it short, and then it comes down, but just not quite enough for us to go long. Unfortunate, but that's the way it is right now. And of course, it's the time of year and the Jackson Hole Summit definitely having their impact. Okay, all right. By the way, in addition to Jackson Hole tomorrow, you're going to get GDP from the UK. Just want to mention that. Do I care about that? Only if I'm in a only if I'm in a Great Britain pound trade. If I'm in a trade for the pound, then I care about GDP for the UK. If I'm not, then I don't. Expectation 0.6. That's for the second quarter. And remember that Brexit occurred really at the very end of the second quarter. So you cannot really say anything about Brexit in relation to that GDP number. It doesn't really tell us anything. Third quarter is where we'll really know about Brexit. So we're going to get GDP out of the UK and GDP out of the US both tomorrow. So in addition to Jackson Hole, those are your two major events. Yellen's speech scheduled for 2 p.m. tomorrow, U.S. time. Market should be very quiet and very thin at that point. But just keep this in mind. Lack of volume does not always equal lack of volatility. You could see the market become more volatile due to the lack of market participation at that point. Okay? All right. And let's get back to the charts then. So we know everything that's coming at us, right? Carlos is saying Euro Pound came down to 85. Let's take a look at Euro Pound. You know, I've been waiting for this thing to come down because it keeps hitting new highs. Not all-time highs, but it's been a long time since the price has been up in this neighborhood. Right? If I go back to the weekly, you got to go back to like 2013, late 2013, early 2014 is the last time that Euro Pound was up in this area. So I do like the pullback, but I mean, my goodness, you know, it's about time, isn't it? And I'd really like to see a deeper pullback. I would consider getting long, but I'd like to see a deeper pullback first. That's an interesting candle right there. You've got the pullback and then the green candle pretty much wiping out that red candle after a pullback. It's a tough chart to trade on this time frame. You know, I might want to look even at a lower time frame still, but definitely I'm thinking you're in an uptrend here. You want to buy pullbacks. The euro is stronger than the pound, but then again, not by a wide margin. Is this an uptrend? Technically speaking, yes. Is this a strong uptrend? I wouldn't call it that. Okay, I would say it's kind of a mild uptrend, and that doesn't really get me that excited, but at the same time, I would be a buyer rather than a seller. Oversold RSI on the hourly, that's exactly the type of thing that we look for. Let me just move this back. Right, so when it pulls back on 3 days on the daily here, we can go take a look at the 60-minute on the hourly, and those have been, you know, in an uptrend. You know, what do we like to do? Well, there's a lot of things we could do. We like to buy on a moving average if we see moving average support on the daily. So for the 10-day exponential or the 20-day exponential, that's two ways to trade it. Another thing to do is to use RSI, as Carlos mentions here, on the hourly, and there you can see it, right? A very sweet, nice, deep oversold reading here gives a great buying opportunity yesterday in Euro Pound as the euro slides pretty sharply against the pound, and now the euro's gaining it back. But that's brilliant. That's what you're looking for. These are also buy signals. I just want to point out, though, this is also a buy signal, and this one does not work out. Look, the price comes down, 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 and it becomes oversold, and you're thinking, hey, maybe this is it. But it doesn't work out. And obviously, if anything worked every time, we'd be all over it, right? You know, look at this is a beautiful example of buying on the dip. Look at that sharp drop right there, creates the oversold on the hourly. Kaboom! What a place to buy, you know. But then you got these over here. these are not going to work out all that well. But you can't win them all. This one, winner, winner, chicken dinner. Very nice, deeply oversold level here on around noon yesterday, New York time. Presents a great buying opportunity. And if you missed it, you got another shot at it last night, right? Late last night, U.S. time. Oversold again, and again, another buying opportunity and a nice pop. So congratulations, Carlos, if you caught that oversold reading on the hourly. And for those of you who aren't familiar with it, I know that Carlos has been with us for a while. What do we do? We look for the trend, right, on the longer term, such as the daily chart. We look for the trend, and we'd say, okay, it's not a really strong uptrend, but it is an uptrend, right? And then we go to the hourly, we go to the 60-minute to look for buy signals. Now, if this is an uptrend, I can only buy. And if this is a downtrend, I can only sell. It's an uptrend, so I can only buy. I go to the hourly, and I look for buy signals on the RSI. Conversely, could we use it in the other direction? Absolutely. Let's take a look at dollar CAD. I don't know, dollar CAD, probably not a good example here. It's not really trending all that well, right? That's a sideways type of trade. But you take a look at something like, I don't know. Well, at least Euro Pound had a nice trend to it. Well, how about dollar yen? Dollar yen has a very nice trend to it, right? This on the daily, very much in a downtrend. So you would only look for sell signals, but not in the higher time frame. You'll notice that here in the daily chart, there are only buy signals. There are no sell signals on the daily chart, but that's okay. We're not using the RSI on the daily. We're going to use the RSI on the 60-minute, and that's where we're going to look for sell signals. So if I go to the 60-minute, you see this is a good example too. On the daily chart, on the longer time frame, RSI is always going to tell you to go against the trend. You just have to ignore anything that tells you to go against the trend. The only signals that go with this trend would be sell signals, and we're going to find those on a lower time frame. So I go to the 60-minute chart for dollar yen, and we look for the sell signals. There's a beauty up here. Nice place to sell up in this area. Obviously, if I could turn back the clock and sell at 102, I certainly would, because we certainly did get below 100. And we get some more sell signals here. Again, they're not all going to work, but this one is a beauty up here, around 102.50. A couple of them are in that vicinity. Maybe this one here was a little premature, but you got a couple of good ones here. You got a couple of good ones in here, all right? And that's what you're looking for. You're looking for, look at this. The price spikes up here to 107 and creates a sell signal. My goodness, do we wish we had sold at 107? Absolutely. Do we wish we would have then sold at 106? Here's your opportunity right here. Absolutely, right? So that's what you're looking for now. You're looking for that RSI to come above 70. The signal occurs not when RSI goes above 70, but when it turns and drops below 70 and the candle closes with the RSI below 70, that's when the signal is given. The kind of support area on the daily plus the RSI oversold helps. Yeah, so Carlos was looking at more than just signals on RSI. He was also looking at support on the daily. And right, so there's this support level. I suppose it's this one here. There's pretty good support in this area right here, a little bit higher. That could be what Carlos is referring to. I'm not sure. But, on Euro Pound. Right, okay. So using RSI in conjunction, and that's a great point, too. Like, what if RSI gives you the signal to buy or to sell, and at the same time, you're buying it at support? Right? What if you get the signal to buy, but at the same time, there's support? What if you get the signal to sell, and at the same time, you're at resistance? Or what if you get the signal to sell, and at the same time, there is a shooting star candle? right? Or, in other words, a different reason to sell that has nothing to do um, with the RSI. Durable goods up 4.4%. Let's see if the dollar recognizes this. It's mostly transportation. You take out transportation, the core durable goods up 1.5. You can see, wow, look at that wick that just occurred on Euro USD. Right, we just shot down and back up. So let's take a look here. 4.4 was the actual result. There it is. You're looking for 3.5, you get 4.4, slightly better than expected. The dollar gets stronger. But then you get a revision of negative 4.2. That's a little bit worse than the previous month. You know, but a lot of this is transportation. A lot of this is cars and airplanes. And automobiles and airplanes can give you a false reading because of the way that they're sold. The sales of these items are not steady. They tend to come in big lumps. Like, let's say a country orders 50 Boeing 747s in August. Well, the August number shoots higher because of that. But they're not going to order any in September, October, November, or December because you only have to buy once. And they're probably good for years. So you've got, they're not the type of goods that sell steadily. Aircraft are not the type of goods that sell steadily. Same thing with automobiles, right? In September, next month, all the new models will come out. So you're probably not seeing a lot of auto sales right now because people are waiting for the new models to come out next September. Or they're waiting for the new models to come out so they can buy an old model cheap. Think about that. All right? They can buy an old model on the cheap because companies are trying to get rid of those cars. So cars and automobiles tend to sell in lumps. That's why we have X transportation. The X transportation number gives you a clearer reading of what's happening. You're looking for 0.5%. You get 1.5%, so better than expected. Previous month revised higher from negative 0.5 to negative 0.3. So just looking here, like we saw the initial reaction was very dramatic, but the truth is 3 minutes after the report, we really haven't gone anywhere. We're right where we started pretty much, right? That looks like a very dramatic move, but that's only about a 10 pip move down, and then it shoots right back up to where it was, and that's where we've stayed ever since. So just going to the 5 minute here, you can see it's a weird looking 5 minute candle, isn't it? It's all wick at this point, but this is really telling you that the price hasn't really changed. What about those other numbers? Unemployment, very few people are seeking unemployment. Only 261,000 new jobless claims. So people are not losing their jobs, and that's a good sign, right? People are not losing their jobs. Of course, you know, the quality of jobs that have been created in this country are kind of like the take it or leave it kind of jobs anyway. They don't pay very well, and you have to wonder how long, you just remember that the U.S. is only counting 2/3 of the population. When we say the unemployment rate is 4.9%, that only counts 2/3 of the population. All right, so it's very, very tricky the way that they make these numbers look better than they really are. But that seems to keep people happy because most folks do not look past the surface. Okay, all right, let's take a look at it. We've got time, so I think, and there you can see there's a little bit of movement going on, but it's nothing to get excited about. Probably the only thing left I can look at here is pound dollar for the moment. I still have enough time to look at this. We drew this sort of rectangle out earlier. I can stretch this out a little bit. We're kind of in the middle of the rectangle here. And really 134, just a little bit above 134 is really the barrier. We're in this sideways activity. I said the economic statistics coming out of the UK have been improving. And we'll get GDP tomorrow. Perhaps that will create a little bit of a catalyst. But just remember, everything is going to be overshadowed by Jackson Hole. But yeah, maybe we'll see some nice GDP because we saw some very good retail sales. And I'm always rooting for our friends over there in the UK because, hey, good people. And know quite a few folks over there. And so I'm always rooting for them, and I think what they did was very brave, to break away from the European Union. It was definitely the scary thing to do, but they decided it was the right thing to do, and so they were going to do the right thing no matter what. And so that's what they chose to do. And now they're in a situation where most people think that they are now going to go into not a recession, but they're definitely going to be hurt by this economically. Okay, but we'll see if that's true or not. Anyway, that you've got GDP coming up tomorrow on this one. There's not really much to say. We're drifting in this zone. Within this time frame, if I go lower, if I go to the 60-minute, again, I think a lot of trades can possibly be done using that type of multi-time frame technique, right? And quite frankly, if you're going to look at this objectively, we're not trending. We're sideways. So you could sell or buy. You could sell here. Would you like to have sold here and bought here? I think so. And sold again here? Maybe not, but over here looks pretty good, right? Will Japan intervene? And how long do you think Japanese yen will continue to be strong against the U.S. dollar? These are the things that everyone's looking for clues this weekend in Jackson Hole. Everyone's looking for clues on these, all right, because nobody really knows. Kuroda is hinting that there will be more stimulus in September, or there might be. He's kind of being coy. I expect that he's going to give a speech, and he's going to. He's been very hard to project. All right. Now, what he has said, there's a sufficient chance of more easing in September. That's what he said. So I'm going to take him at face value and say, okay, pretty good chance that Japan cuts rates deeper, does even more quantitative easing, which is hard to believe. But it's there. It's possible. So they're just going to keep doing all this stuff that hasn't been working for 20 years in Japan. They're just going to keep pursuing it and pursuing it, right? And so these comments just came out earlier this week that Kuroda says there's a sufficient chance of action in September, but it's just hard to predict. And I expect to hear from Kuroda, and I expect to hear some clarification. I hope to hear some clarification tomorrow at Jackson Hole. That's kind of what everybody's waiting on. Okay, gang, we got a late start, so we're doing a late finish, so we're going to stop right now. But I'll be back at the top of the hour, just 20 minutes from now, so please get ready to sign in again 20 minutes from now, and we'll pick it up right where we left off. I enjoy your questions, and I love speaking to you here on FX Street, so let's do it again in 20 minutes. Until then, this is Ed Ponsi saying thank you for listening. I'll see you back here shortly.